Welcome to the Financial Freedom Secrets Show. This is your host, Jackson Milan, the Wealth Mentor, helping business owners create financial freedom faster by mastering the language of money. Want to see how well you're tracking towards financial freedom? Complete our 40-point financial performance scorecard at wealthhealthcheck.com.au. That's wealthhealthcheck.com.au. The average score for most business owners is 18 out of 40. So complete the scorecard now and see how well you're tracking towards financial freedom. G'day guys, this is Jackson Milan, the Wealth Mentor, and we're here for another episode of the Financial Freedom Secrets Show. And I'm super pumped for this episode because this is actually a space that I've been doing a lot of research and training myself. I'm still very much an amateur in this space. So I'm very excited to have Bill Nico here to share his story of how he's been able to use his business to be able to achieve some amazing results, listing on the stock market, mergers, acquisitions, and a lot of really cool stuff, which I'm going to save some of this for him to share with you. But I'm super pumped for this episode because I feel for many of you guys, you're looking to use your business as a vehicle to create financial freedom. And there are some really creative ways, some really amazing ways for you to be able to supercharge that trajectory and be able to get to your goals faster if only you understand those strategies and you get the right advice. So, Bill, thanks for joining us, mate. How you doing?
I'm great, thank you. Feeling good and cold Melbourne morning, but motivated. It's good.
Fantastic, mate. Well, you can tell that I'm up in the tropics because I'm wearing my my best flamingo polo shirt here, mate, and I'm rocking my shorts. And it is very warm up here, mate. Much warmer than where you are, I suspect.
Yeah. I wish I was there with you, mate.
Mate, welcome anytime. So, Bill, for those who don't know yet, tell us a little bit about you, your business, and your journey so far, mate.
Yeah, so I'm an entrepreneur. Starting my first business at 21. Couple of failures along the way. When I was about 26, I started a digital company that did property research, which I sold to an ASX-listed property platform named iBuyNew. And then a couple of years later, I became their group CEO and managing director, and sort of my corporate career started from there. I later went on to be the chief revenue officer at another ASX-listed technology company called PropTech Group. So selling businesses to ASX-listed companies, reverse takeovers, a lot of acquisitions along the way, capital raising. So a lot of exposure to that part of it, but really my passion lies in small business. And I'm back in that world now. I've got 3 businesses that I work on, and my main one being the business coaching and executive coaching business, which I also do keynote speaking in that one, Levels Growth Consultancy. I've also got a digital law firm that we started about 8 months ago. Is one of the fastest growing law firms in Australia now. And I've got a buyer's advocacy going back to my roots of property research with a couple of friends. We're a bit of a passion project more than anything. But yeah, so doing 3 things now, keeping myself super busy, but I wouldn't have it any other way.
I love that, mate. This is fantastic. There's so much for us to unpack here. So let's go right back to the beginning, Bill. You mentioned that you had some early failures. And I feel in the space of entrepreneurship and through our upbringing, through the school system and kind of social conditioning, we're kind of bred to fear failure. But as an entrepreneur, we need to embrace it. And I've always had the philosophy of trying to fail fast and fail forward. So, mate, what was your early relationship with failure? And has that shifted over the years with more experience?
Yeah, definitely. I mean, I'm much more comfortable with failure now than I was back then. When I first started a business, I didn't come from a family that had, sort of businesses or anything like that. Dad was a cabbie, drove my uncle's cabs. Mum was a seamstress and a kitchen hand, blue collar upbringing. And then when I started going into business, I thought that I could do something a little bit better. And I wanted to try. So I started a marketing company. And actually, the funny thing was early on in my career, when I think back at those businesses, the actual service delivery and the product was actually pretty good. Just no idea about how to run a business, like zero knowledge about financials, about cash flow, about all those really important things that are just not the technical part of what you're delivering. Both of those businesses, when I say failed, it wasn't like bankruptcy or anything, but we lost a bit of cash along the way and closed the businesses down. But yeah, some hard lessons learned there. And I think to sort of encompass those into one little thing, it's really just that being really good at your craft, so marketing or whatever, which is what I was doing back then, isn't enough. You have to also have a really deep understanding of business and how businesses work and how businesses succeed. And you can outsource the technical bits of that to accountants and the like, but you have to invest in yourself to have an understanding of how that stuff works. Otherwise, it's not gonna be successful.
Oh, mate, you're speaking my language. We talk to business owners all day about this, where they've been abdicating responsibility because they're like, I'm not a finance person. I'm like, there's no such thing as a finance person. Like, you owe it to yourself to understand these fundamental principles so you can actually get value from your advisors, your accountants, and so on and so forth. So that's sage advice, mate. So then we move forwards into your first prop tech business. Now, when you started that business, did you start with the intention of exiting that business, of selling to a publicly listed company, or did that just come up along the way?
I know people that start businesses to sell them, and I think it's completely fine to do that. It's a good strategy if it's the right one and for you. But I've never done that. I've always started businesses and run them forever, like as if I'm going to have it forever. But always being open, always open to conversations. I've never been super emotionally connected to a business. I've got to say, I'm not someone that falls in love with what we're doing. I mean, it's really, I fall in love with the team and the people, and, I want to see everyone succeed. But the business itself, my dream wasn't to be a tech guy, to be a property guy. Although I love all those things, my passion was to build something really cool, really great, something different. And no matter what that is. So I don't get too emotionally invested in the thing. I get invested in the process and the people. And yeah, I mean, that's that business that I started in Micro Property, it was started as a research company, and we're selling research reports to developers, property developers and agents, and we're making $5,000, they were making $30,000. And we thought, shit, maybe it's a good idea to look at, taking that next step. And then we basically became a middleman between the developer and the real estate agent. And we were licensed like real estate agents, but we didn't sell property per se. We did all the research, put it all together, and then found the right groups around Australia to help sell those projects. And, after a couple of iterations, that moved to a business that dealt with financial advice businesses and mortgage broking businesses and doing research for them and then offering properties to their clients. And, it just sort of, rolled after a few model pivots, very deliberate model pivots, into a business that was, I guess, very sought after by this really just one company that really needed exactly what we were doing. They had a great platform for B2C, but our B2B, B2B2C platform was something they were missing, and it just so happened that it was a perfect fit.
Amazing, great, fantastic. And look, hopefully you don't mind me asking this, mate. There's multiple ways to structure those kinds of deals and those kinds of exits. Some people take all cash, some people take all equity, some do a little bit of a split. Would you be happy sharing what the kind of rough breakdown of that deal was?
Yeah, that's all public information. You can Google it. It's a listed company. So we sold out for $875,000. I sold out for $875,000. Plus they took on some debt. So it ended up being, sort of 7-figure type deal. And that was structured 50% cash, 50% equity. And this is, I might make a lot of mistakes, and I learn the hard way probably too often. But one of the mistakes that I made was I did do due diligence on that company, but my naive 27-year-old mind was, by then it was about 30, probably it was 31, 32. My mind by then was, this is a publicly listed company. It's secure. It's strong. I did the due diligence. My accountant helped, but it was kind of just tick boxes type thing. I was just excited, to sell the business for more money than I ever thought I'd get for that company. It was, I didn't do enough due diligence, and within a very short time, maybe a year, I realized that company did extremely well. So they're making, I think, $1 million profit for a $5 million revenue. Great business when I actually sold into them. But that core business went backwards real quickly and was burning cash very, very fast. It was a good market business. When the market was good, they were doing great. As soon as the market turned, very high expenses, the typical story. And they got rid of the CEO, who was someone that I really respected. and I was okay. Like, I understand how business works, and I wasn't too upset. I was upset about it, but I wasn't. I kept moving on. And then the new CEO, nothing against him personally, just me and him just didn't gel. And about 6 months into his tenure, I went to resign. The business was going one way, and that was downhill. I resigned through the fact that I lost $500,000 effectively, or 475,000, whatever it was, because that business I was in my mind was going to go broke. When I resigned to two board members that bought my business, I thought I'd call them and resign to them, and they asked me to stay and try and save it. And that's how I got the CEO role and the managing director role.
Wow.
Exiting a business, doing those deals. Sorry, long way to answer this question, mate.
That's
But
great.
doing those deals, that's probably a cautionary tale to say, do your DD. Not only them on you when you're selling. You need to do your DD with them. If it's an all cash deal, okay, fine. But typically it's not. Even if it is an all cash deal, like, one thing I didn't do enough DD on was, I'm taking my team with me. Who are the people that are going to be now dictating how we work? And, and it ended up being a pretty bad experience for a lot of my team members as well. And I regret that. So you need to do your DD as well as theirs. Get excited about the deal. You're going to make some money, all that kind of thing. But, you got to do your DD the other way as well.
This is great advice, mate. And look, I think you're trying to put myself in your shoes. You can get caught up in the bright lights of it's a publicly listed company, how exciting, cash, and you can look through it with rose-tinted glasses. And with the benefit of hindsight, we learn. So, mate, the next big transition here is, look, many publicly listed CEOs, they don't get, the metal doesn't get tested, right? They often get into that role when we're in bull markets, we've got free-flowing cash flow, the business is doing well, and it's an armchair ride. But your story, it seems, was very different. You were basically thrown into the deep end to try and save a business that was potentially on risk of delisting and going insolvent. So can you talk us through the high-level strategy of stepping into a position of a business in dire straits and what you did from there?
Yeah, it was worse than I expected. I was at the board meetings, but so I had a basic understanding of what was happening. But when I got into the chair and I sat with the CFO and went deep in, it was worse than I expected. We probably had about 3 months worth of runway, like nothing. And you got to realize, becoming a CEO of a small listed company, you become the director of all the subsidiaries. So suddenly now you're at risk of not only the company going insolvent, but you're also director of a bunch of subsidiaries that might go insolvent, and that's not what you want on your resume, right? So it was the most stressful period of my life for sure, and that 2-year period. But what we did was we went to the board with a plan, and that plan had 3. Forgot what I called all of them, but I remember what I called the one they chose, and that was the nuclear option. And the nuclear option really was the only option. And that was the hardest thing I've ever done in my life. We had to make like 4/5 of the team redundant, pretty much everyone. And we then had to do a capital raise to clean up the balance sheet when we had no right to do a raise. But we had some really good shareholders that believed in the strategy. And we sold off a few of the assets independently, then relisted that property into would you believe, a mining company. And, from our shareholders getting 0 cents on the dollar, that mining company, after it listed, went 5x, so 500% up the share price. So, from getting nothing, a lot of those investors came out, pretty decent after all that. Still a lot of them, because of dilution, and I'm sure you know how that works, they still didn't get all their money back, but they got a really high proportion of it, and much more than, obviously, is a lot more than zero. So we had some really happy shareholders, and it was, like I said, super difficult time. Like literally the most stressful time in my life. And I tell this story often, but I remember pictures in my head of sitting in the shower crying. Like just meeting with this insolvency people every week. Are we trading insolvent? Am I going to lose the family home? Well, we weren't, and we're doing the right things, but at that time when you're under that much stress, sometimes your mind plays tricks on you, right? So it was a super high stressful time, but honestly, one of the proudest moments of my life. not only did I save some of my own money, but all these shareholders that have put in a lot of money in that business got at least some of their money back, or a good portion of it.
Mate, it takes a lot of cojones to do that kind of thing, to step into the fire, take on all that liability, and take the responsibility upon yourself to go and not only recover your own money, which of course is important, but also of shareholders, which, to be fair, it wasn't your business. You didn't have any responsibility to them. What do you think ultimately drove you to make that decision, Bill, knowing how difficult it was going to be and the amount of pressure that it was going to take?
Mate, I'll be honest with you, Jackson. I think I was naive. I'd had a few wins, and I thought I could do anything. I thought, and honestly, I remember sitting down with my offsider, Eric, our CEO at the time, and I said to him, everything that we're doing now has to go right. Not one thing can go wrong for us to survive. It was like 6 or 7 things. And with a mixture of luck, a great board to help us, especially one of the board members, Stephen Quantrill, and shareholders that were just so way more supportive than they should have been, just people that just believed in us when maybe they probably shouldn't have, and just believed in what we were doing. So a mixture of hard work, good plan, and luck, got us through. But I've got to say, Jackson, if I was in that situation again, I don't know if I'd do it again. Although all the other hard work and plan was good, but there was a lot of luck too that went right, and I don't think that would happen every single time.
And I think there's always an element of luck in business, right? As the saying goes, the more you practice, the luckier you get. And mate, a huge amount of respect to you for that situation and navigating it so eloquently. I think it's an amazing story, and I think we can learn so much from it. So, mate, let's have a little bit of a shift of pace here. As somebody who is considering the option in the future of listing our business, one of my reservations is that although I'm a bit of a public figure, I love to speak, I love thought leadership, I also value my privacy. And I feel that stepping into the seat of being a CEO of a publicly listed business does come with a certain amount of spotlight. And obviously, if it's a small business or a micro-caps business, it's not like we're in the ASX 200. However, you do lose a sense of that privacy. So for somebody who's considering going into a publicly listed company, being in a C-suite position, what would be your advice to someone like me?
Yeah, a good question. I think going into a listed C-suite role, it's not probably what you might expect. Being the CEO of a private business is it's not even the same role as being the CEO of a listed business. Probably and the bigger you get, the more changes. But even on a small nano cap like the one that I had, probably 20 to 30% of your time is dealing with public company stuff. So when I say that, I mean doing cash flow, 4C reports, doing your annuals, doing, shareholder meetings, AGMs. There's just a lot of stuff, and you've got to be available to shareholders because, you might need them again when you want to do your next capital raise and all that kind of stuff. And plus, you should just be available to them. They've invested in your business. So there's a lot of that. And really, you're probably only spending 60, maybe 70% of your time actually running the business. So it's a very different role in that from that perspective. In terms of complexity, there's you probably have advisory boards in small businesses, or maybe even a board. But having being in a listed business, having that kind of board is an added. Again, the amount of work to put together board packs every month, or in a nano cap, you're probably going to be meeting monthly, not quarterly. It's not Telstra. So, there's quite a bit of time and effort to do those. Valuable because you learn a lot yourself by putting them together, but still, a lot of time and effort goes into those types of things. So I guess my biggest advice is, first of all, it's just a very different role to what you're doing now. iBunny was such a small company, tiny company, but just being the CEO of a listed company does put on your radar, just the things that, I turned all my socials to private, just little things like that, because I just didn't want to give anyone any reason to maybe not invest in the company or to sell out of the company because I did a silly post with my wife at a restaurant having a few drinks. I don't know, I'm making that up, but whatever it might be, right? So you do have a level of, of care that you've got that I think is probably prudent in a business like that, where you've got a lot of shareholders, where whether you might think is right or wrong, it might be perceived in a certain way, and and when you've got you get this one thing that I had, and I don't know if everyone does, but you have this really big sense of responsibility to shareholders. Like you're like, I'm responsible for this business, and people have put in a lot of money into this, and their savings or whatever it might be, and you have this big sense of responsibility, and that changes how you live your life a little bit. Like I said, turn the socials off. Just a little bit more careful. When I'm out and about, and the way I conduct myself. So there is small changes that you've got to make to your life.
Makes sense, and I think with as they say in Spider-Man, Uncle Ben, with great power comes great responsibility, right? So I think that's a really great testament to that, mate. And look, the next part of this is I've through my MBA, I had the pleasure of studying some great publicly listed CEOs and private CEOs, one of which being Michael Dell. And something that's always stuck with me, Bill, is that Michael said that when you're a listed company, you shift from being a long-term focused visionary in a private business to being short-term focused of appeasing shareholders because they're primarily there for short-term returns. With the benefit of your experience and hindsight, what's your perspective on that, mate?
One of the things I hate the most about listed life versus private business is that it's a quarterly scorecard. It's you do have a long-term view, but the short term is more important than the long term. There's no doubt about it. And the best CEOs can swap that and have enough gravitas with their shareholders to say, no, actually, this is the long term plan is more important. And that, you look at the Amazons of the world, who lost money hand over foot. Everyone said it was a crap business for years until it became what it is. But he had the the cojones to push that through when probably many people wouldn't have. They're the best, but it's difficult, especially nano cap, micro cap world where $10,000 worth of shares can halve your price of your stock, right? So these quarterly scorecards and the 4 Cs and and your half yearly and your yearlies are really important. There's no way of getting away from that. So it's about how can you balance making sure you get short term results to what's the medium and long term plan. I remember when I'm in small business, even now, if we have a bad quarter, we're just like, man, we made some mistakes this quarter. Let's not do that again. And you just move on. When you have a bad quarter in the listed world, your share price drops. It's just a different beast.
Makes a lot of sense, mate. This is super valuable, Bill. So when we exited that business, we transitioned to the mining company, we got the shareholder back returns. What was the next chapter of your entrepreneurial career, mate?
Mate, I wanted to get back into small business. That's my passion. I love sort of starting from nothing and growing. And then I got a phone call from Joe Hanna, and he sold me a beautiful dream of this awesome project. And man, I'm a sucker for cool projects and doing, like I said to you, building something really cool. There's some really great people behind that business, people that I've always looked up to, Simon Baker of realestate.com fame. And he sold me on this fantastic idea about what they were trying to achieve, and it really was great. And I got back into corporate initially as the chief operating officer. It was a reverse takeover play. They basically brought together 2 technology companies into one, listed it. And my job was to bring that all together, make sure it all works. And about 3 months in, that kind of my role pivoted from still doing a little bit of that, but taking care of the revenue side. Joe and that team, Michael Fiorenza, the CFO. I mean, two of the best I've ever seen at putting deals together and finding M&A type activity that will generate above average returns for everyone. The people coming in, selling in, get their stock increased. We're always trading at much larger multiples than the ones we buy, and they did some great deals. And then my job was to, after doing those great deals, integrate those products and then find a way to sell them to real estate agents in a way that made sense to real estate agents and improved their life and improved the consumer's life. And we just built a go-to-market model there that, we had imagine having 5 different products and going to a real estate agent and saying, hey, I've got this CRM, and then John's going to come and see you about a website, then Jenny's going to come see you about this. And, it's like, mate, the real estate agent's like, you're just trying to pitch me everything. And we had made this really, really difficult. It was, to pitch this to Joe on the board, let alone the owners of all the subsidiaries, the previous owners of the subsidiaries, was difficult. But we basically said, we're going to take away all your sales and marketing functions, bring them into a central area at PropTech Group, the head company. And instead of going to real estate agents trying to pitch them, sell them 5 products, we changed our whole demeanor and coming in as their technology partner. So, hey, what do you use now with tech? How can we improve that for you? And even to the point where, if they were using another bit of tech that we didn't own or partner with, would integrate with it so that they can use all their systems out of one, our CRM. And it just resonated really, really well. That year, that full year, we grew from 9 million in revenue to over 20 million in revenue. We did it, I'll say profitably after adjustments, that works, but so just about profitably in the tech world, which is almost unheard of.
Unprecedented,
because, really big effort from a great product teams. Each individual subsidiary had great products and very supportive. And then we built this great sales and marketing function that didn't feel salesy. We weren't going in there pitching. We're going in there as a partner, and we took the sales team really took one of our values really seriously, and that was to become real estate industry champions. So everything that we did was with that in mind, and we did big marketing campaigns around it, and it just resonated really well, and that was a big part of our growth. That was a really fun time actually. Yeah.
That's huge growth, mate. And look, I think all business owners, they throw away the line of like, oh, I want to scale. But I think many business owners don't really respect what scaling means in the context of the evolution of their business. And for many of those businesses, when they scale too quick, they break the systems and they can burn cash, they can burn their business, they can burn their reputation. So to go from 9 million to 20 million, that's tremendous growth. What would be your best advice based on what you learned through that amount of scale so quickly that small business owners could take into their own business when they're trying to scale?
Yeah, it's not just one thing, I guess. It's a lot of things that need to go right. First of all, you have to get your go-to-market or your model right. You have to understand your customer, understand what they want, and then deliver it. And as an aside, just a quick story about what I'm doing now. The reason why Bond Conveyancing, the law firm, is one of the fastest growing law firms in Australia was, we built this tech thinking, we're going to make tech better, legal tech better, because it was pretty crappy. And what we quickly found was that the people that were giving us all the clients, the real estate agents and the mortgage brokers, the lawyers and the conveyancers just weren't giving them any information, weren't communicating with them, basically that made the experience worse for consumers.
Yes.
So instead of, spending all this time and money building out this product that's going to help our conveyancers and the consumer who was okay with the process already, we put the real estate agent and the mortgage broker at the center of everything that we did. And so all the technology that we built, all our processes that we built, our SLAs, everything was around how can we make this a better experience for the agent and the mortgage broker, because we knew that would translate into a better experience for the consumer. And that's why that business has exploded. And we did a similar thing with PropTech Group. And, not to oversimplify, but it's all about customer experience. Like,
yes.
What can you do so that the customer experience is better for the client? Obviously, your product's important as well, but, often you can work around that. We've often had worse products. I remember at PropTech Group where, admittedly our product wasn't the best in that one domain, but because it integrated so well with our CRM, it made it easier for the agent anyway. So really it's all about that model, right? So understanding the model, and then, when you go to scale, I have a really simple theory. You have to first hire 2 people. And those 2 people are going to make or break your sales. You as the founder or the owner, and I don't care if you're a mortgage broker, financial advisor, or a tech guy, you need a couple of people initially that are going to be really good at what they do. And they're going to help you build out the processes. You can't do it on your own. You need a couple of really good people, and they need to prove that concept before you can scale. And then it's all about hiring people that fit within your values, and you've got a really good management meeting cadence, accountability cadence to make sure that you hit those targets.
Beautiful, mate. You make this sound effortless, Bill. It's really an art form, mate, and it's just a testament to your experience and your operational nous. Because so many business owners get this wrong. They scale because of their ambition, but their ambition outgrows their ability. And you need to have that catch up and singing off the same song sheet. And it's just, this is common sense stuff, but so many people get caught up in the bright eyed and bushy tail idea of growing and scaling a business that they don't focus on the fundamentals. I think that's where the money's made. And that's how we build a business that can stand the test of time.
Yeah, my best advice to anyone thinking about, how, because when what I call founder-led sales, and I don't care if you're a broker or a tech guy, effectively, if you're the broker writing all the loans or you're a real estate agent doing all the sales or whatever, you're probably great at what you do. So you probably don't really have a really sound process because you're just good. You just do what you do because you know what you're doing and you're great at it. But you can't scale that way. You have to build a repeatable process where not everyone's going to be at your level, otherwise they'll be doing what you're doing. So building a process that works in a scalable manner is important. And
yes.
I always say that don't build a sales process, build a customer journey. What do your customers want to do? How do they want to experience it? Not how do you want to experience it. Don't worry about what you have to do. Worry about what is important to them. What are the pain points? What are the friction points? When does it start and finish for them? I always say, I have a mortgage broker client, and I said to them, your process finishes when the loan settles. Their process finishes when the boxes are unpacked and the kids are in their room and the beds are made, right? Like it's a beautiful, very different idea about, so have the customer in mind when you're building out your process. And I think that goes a long way.
Oh, phenomenal advice, mate. I love that. So here's an interesting conundrum that many founders have on entrepreneurs, and I've been guilty of this myself, that we understand the vision of what we're trying to create. We know where we want to take it. But the stakeholder engagement, whether it be leadership team, whether it be management, whether it be the technicians or the other team members in the business, fail to either see it or follow through with it. So in your experience leading these teams and working in these leadership roles, what do you think is the key to stakeholder engagement and being able to translate your vision for the future into action across the team?
Yeah, so I think it's different for different parts of, different stakeholders. I mean, when I think about employees, the best leaders for me, and I talk a lot about servant leadership, are these in the 21st century, are these people that are in servitude of their staff, their team, not forgetting that boss, getting rid of that boss mentality and getting that support mentality in. But engaging them in a way where, yes, you're supporting them, but then you should have high expectations, this radical honesty policy that I talk about, where it's feedback is very highly encouraged in a process way that is friendly and positive, and then ensuring that responsibility is across the board. So I always have one person responsible for every task, one person responsible for every business unit. So that way, if something goes wrong, we know who is responsible and who needs to fix it. Employees, just having a sound strategy about how to engage them, and you have to have a strong purpose. You have to believe in something, and then, I guess the other stakeholders, you just need to understand who are the important people in your business. Who are you always say, who are your clients? People say to me, oh, it's this person, the consumer. I'm like, yeah, but where do you get your clients from? I get them from this kind of company. An accountant gives me all my clients. Well, they're your client too, right? So how do you have to engage them? What do you have to do? So different stakeholders need different engagement plans. And you have to, I think the first step is to understand who are the important people in your business, what industries, what do they do? And then putting a plan in place for all of them. And I've been guilty of, in my life, coming from small business where, you don't have to manage up, so stakeholders are typically, partners, suppliers, staff, but there's no one really above you. But in a listed world, you've got shareholders and you've got a board, and the shareholders I've always been good at. I haven't been the best at the board piece in the past, and I'm just still learning and trying to get better at it, right? Because they're really important. They've got a job to do too. But yeah, so just understanding who the most important people are in the process and what you need to do to get the best outcomes from them.
Fantastic, mate. Yeah, I can attest. That corporate governance of trying to manage that bureaucracy. I call a spade a spade. I don't pull any punches, and I can be received as maybe a little bit harsh. And I think maybe you've got to be a little bit more eloquent and bureaucratic in those environments. Would you say that's a pretty safe assumption when dealing with a board?
Mate, I'm exactly like you, and yeah, I didn't. I wasn't bureaucratic. And I think as long as you do it in a respectful way, I think it's okay.
Yes.
I dare say the best corporate leaders are bureaucratic, and they probably can do that. But I'm never going to be that person. That's why I'll never be the CEO of Telstra or whatever, right? Like I'm just not that person. It's not my personality. And I think you just got to understand. You just got to be also, this sounds a bit wanky, but you got to be true to who you are, right? Like what's got you to where you've gotten. And you can't change your personality, right? Like, I mean, I'm 42 years old. I always try and improve and become better as a person, but I'm not going to completely change the way I think or the way I talk, It's just
exactly right. Yeah, I think it's exhausting when you try and be somebody that you're not, right? And I think even particularly if you are in the spotlight as a publicly listed CEO, I think shareholders and stakeholders will respect you more for being who you are, as long as you're not a complete lunatic, right? As opposed to having this facade where you might have your guard down one day and you appear as somebody that you're really not. I'd probably say, and I can't say from experience, but it would be my observation that would be received a whole lot worse than being someone who's congruent to their character.
I think so. And, if you're people appreciate honesty, right? And if you're yourself, then, what's that saying? Better the devil, like they're like, well, at least he's being honest with us, at least we know what we're going to get. Bill's going to be Bill, I'm not going to surprise people too much. Yeah.
Beautiful, mate. This has been an absolute masterclass. Honestly, we should have charged folks to listen to this, Bill, but the community is getting this for free. I know I've got a ton of value selfishly from this, so I appreciate you being so open with all of your IP and your experience. So, Bill, who's an ideal client for you? Because obviously you've got a breadth of experience from bootstrapping startup all the way through to publicly listed CEO, and all of the things in between. So, what does an ideal client look like for you, mate?
Yeah, so, when I started Levels, the growth consultancy and executive coaching business, we said we want to make enterprise level executive strategy and advice available to small businesses. So when we said that, we said, okay, there's probably three types of small businesses. There's your small to medium sized businesses, which are a little bit bigger. And for them, we do a growth consultancy. So we go into businesses that are looking to scale, and we'll look at their go-to-market plan, look at their model, look at their pricing structure, the whole bit, and the team members and all that kind of thing, and put together a plan. We spend 30 odd hours a month with those companies, and really get deep in the weeds in helping them grow their businesses. And then the sort of level down from that, which is your small businesses, which might have 5, 10 employees, 20, whatever it might be. We do executive coaching, so we deal with the owners or the managers, and we work with them on a regular basis. We do weekly check-ins and monthly sessions and a quarterly business review as well. That's sort of our executive coaching. And then for the smaller businesses who probably don't have the cash flow to do any of those things and probably don't even need it, we do these mastermind groups where we get together 6 to 10 like-minded business owners. They meet monthly for 3 hours. Plus, we do a lot of training around that. Other times where they all can get together, and we work together as a group to solve problems that are common in those businesses. And I attend those meetings along with the 6 to 10 business owners. So any type of small business owner or manager is our ideal client, because that's kind of our whole philosophy is to help small business. So we wanted to help the whole range of them.
I love it, mate. That's fantastic. I think it's a great value proposition, super valuable. So if anybody's listened or watched this, Bill, and they're interested in getting in touch and finding out more about those various offerings, what's the best way for them to reach you?
Yeah, so LinkedIn and Instagram, Bill Nico 1010, or you can go to Levels GC, so Levels Growth Consultants, levelgc.com. Drop us a line. More than happy to chat. The other part we do is we do a lot of keynote speaking on various leadership, growth, and resilience topics. So happy to chat to those. I'll I always say, Jackson, if somebody could pay me enough, I'd love to do keynotes all day long. Like I just love that experience of researching them, putting them together, the feeling you get, the feedback from a live audience. It brings out the entertainer in me, mate, and I love it. But I think we're a small.
You and I have a lot of
country,
common in that respect, mate. Yeah, I wish there was more opportunity to get up on my soapbox and do the same. But but I definitely agree.
There's going to be enough
mate.
people that want to listen to us, mate.
Exactly right. Well, Bill, this has been fantastic, mate. If you had to summarize your last golden nugget for the listeners and watchers for them to take away and implement, what would be that last piece of advice, mate?
Yeah, okay. So if you're a small business owner and you're growing your business, have a really good understanding of to what end. If you're growing a business that you want to have forever and you want to install a manager, then, there's a CEO of Agents Agency, a real estate franchise group, that I always steal this saying from him. But he says, growth is vanity, profit is sanity. So, don't just go for growth. Think about your profit margins. If you're looking to build a business to sell it, and I take this nugget from my brother who sold 2 software businesses to global, NASDAQ listed software companies. He builds a profile of the company he thinks will buy his company. So he'll literally pick a company to say they're the ones that are most likely to buy my company, and he will build the company as they would want to buy it. So he'll say to them, what would they want? Every decision you make, what would they do here? What would they want us to do here? And he builds companies that way, and he's been very successful in doing it that way twice now. So, they're the things that I'd say the most. I have a really deep understanding, and maybe you'll build a business for profit and somebody will buy it, like that's happened to me. But, I think having that in mind, the end in mind, is probably important. Yeah.
Amazing, mate. This has been phenomenal, Bill. We'll include all the links in the show notes so people can get access to it. And guys, if you've enjoyed this episode, just remember, a good idea in theory remains exactly that, just a good idea until you put it into practice. So make sure that you implement what you've learnt. Otherwise, it's going to be of no value to you. So, Bill, I appreciate you making the time, mate. I'm looking forward to catching up again soon, and we'll catch you then.
Thanks very much. Cheers, Jackson.
Thanks, mate.